Welcome back to my channel, Accounting Basics by Satya Lakshmi. So in our previous classes we discussed about the trading account and profit and loss account. Today let us discuss about the balance sheet. What is the purpose of balance sheet? The purpose of balance sheet is to check the financial position of the company or a sole proprietorship. The main purpose of the balance sheet to check whether the company is in profit or company is in loss, or the company's financial position, it contains the assets or it has liabilities. To check the position of the company, we are preparing the balance sheet. What are the elements are there in balance sheet? Assets and liabilities. Let us discuss about assets. What are the elements are there in assets? Assets are divided into four categories. First one, fixed assets. Second one, investments. Third one, current assets. And fourth one, fictitious assets. So in these four, there are sub-elements are there. Let us discuss about that. So fixed assets is subdivided into two categories, tangible and intangible assets. What is tangible assets? What is intangible assets? Tangible assets means touchable and visible. We can touch it and we can see it. Those assets are called tangible assets, like land, buildings, we can touch, we can see that. That is tangible assets. Land, buildings, pictures, machinery, those all are the tangible assets. And intangible assets means the assets which we can't see and we can't touch. Like goodwill, patent right, trademark, copyright. So these are the intangible assets. By the goodwill, the company gets lot of profit. That is an asset. But we can't see the goodwill. We can't touch the goodwill. So it is asset, but intangible asset. So assets are divided into two types, tangible and intangible. So which we can see and which we can touch is a tangible asset, which we can't see, which we can't touch, but it gives us profit. It's called as intangible assets. And the second one is investments. The company incurring the amount for the saving purpose as investing the money is called as investments. So the company is saving some money for the future of the company. So that is called investments. And next one, third one, current assets. So current assets is we have to discuss about the current assets. Current assets is divided into 9 types. Do you know what? Let us discuss. First one is cash. The cash is divided into two types. Cash in hand, cash at bank. Right? Cash in hand. So this is the current assets. These are divided into 9 types. First one is cash in hand. Second one is cash at bank. Third one is credit sales. Credit sales again divided into two categories. Bills receivable and debtors. Bills receivable and debtors, both are credit sales only. But what is the difference? The difference is bills receivable. We sell the good, but without any bill, without any security. We are selling the product. We are selling our product without any debtors. And in some situations, if we are friends, so I will give my product without any security. If I don't know who are you, but you have taken more goods from me, so how can I trust you? That's why I was written a bill in that the name of the creditor, the name of the debitor, and the quantity about regarding to that product, everything will be noticed in that bill. So they have given some period to pay that bill. If not paid means they can go to the court. So these are two types: bills receivable and debtors. Right? Next one, outstanding. Outstanding, again it was subdivided into two categories. The first one is income accrued and prepaid expenses. Both are asset for us. So income accrued, that means we have to get that income. Previously we got it. That is an asset. It is income accrued. And prepaid expenses, we have to pay the expense. For example, rent for a company. For every month they has to pay the rent. So this month we got lot of profit. So this month we paid the rent for 2 months. For this month and the next month we paid. So the next month rent is asset for us. Right? So these two are the outstanding assets. So up to here 6 completed. And next one is stock. Stock means it is also subdivided into again 2 categories. First one is closing stock. Second one is inventories. What is the difference between the closing stock and the inventories? Let us discuss. What is the meaning of closing stock? The good is finished but not sold. It is still in the company. The good was finished but not sold. And next one is not sold in that particular year. The product should be sold in that particular year, or else it is a closing stock. The stock is in the company itself, so it is considered as a closing stock. And next one is inventories. Inventories means 3 categories: raw material, semi-finished goods and finished goods. These 3 combinedly given means we use it to call it as inventory, not the closing stock. Why? Because closing stock is only for the finished goods. The raw material, semi-finished goods and closing stock together called as inventories. If there is no raw material, if there is no semi-finished goods means it is called as closing stock. I hope you got the clarity. And next one is short-term securities. Short-term securities. What is short-term securities? The goods which we can purchase and sell in 1 year is called as short-term security. It is also an asset. So assets are divided into 9 types: cash in hand, cash at bank, investments, bills receivable, debtors, income secured, prepaid expenses, closing stock or inventories. That means if it is completed goods, it is called as closing stock, or it is semi-finished goods, it is called as inventories. Both are one. Next one is short-term securities. These are the 9 elements we discussed. Right? And now, fourth category of assets or fictitious assets. See, fictitious assets means the asset does not have any value, but it is mandatory. any value. How is it possible? Is it possible? Yes, it is possible. It is a fictitious asset. It is a non-marketable asset. We can't sell that asset. But we have to prepare the asset. How can we prepare the asset? It is an asset for the incorporation of the company. The company management has to promote his company. For that purpose, they use it to prepare some documents. It is very essential. If there is if the company does not prepare this document, there is no license. Without license, no company. Without license, any company will be there? No. This document contains memorandum of association, directors list, article of association, consent list from the directors, and also statutory declaration. So these are the very important documents should prepared by the company management. So without this company there is no license. Without license there is no company. So for preparing these types of document, the promoter has to incur in some amount for stationery. So these are the expenses incurred by the authorities before the incorporation of the company. If there is no such kind of incurring means, there is no license. There is no license means there is no incorporation. So this type of expenses is called preliminary expenses. Merchant has to spend amount for that. It is an asset but we can't sell it. Did anybody purchase it that? No one. We can't say that because it is a license. Right. See, in some situations we will get the discount. Right? Discount allowed. In some situations, discount is given by the company. When and what are the things happen in the company to give the discount? See, in some situations, because of some issues of the business, no one used to purchase the shares or debentures of the company. Every company contains the shares and debentures. For sometimes, no one used to
purchase the
debentures or shares. At that time, the company will give some discount. Like if each share contains 100 rupees means they used to give the discount 10%, 10 rupees, and the share rate will be 90 rupees. So, according to the double entry system, debit and credit should be equal. We all know that. When we are selling the share, the complete 100 rupees we are entered into the liability side. But in asset side, just we are showing 90 rupees as the share value. Is it the debit and credit should be equal? No. The difference will given the difference in the total. So that's why we have to write the share value and did any discount given means under that discount. We have to add that both. Why? Because in liabilities we are entering the capital side the complete share value 100 rupees. So to become the debit and credit equal, we have to enter the discount also in the asset side. Right? I hope you all understand about the topic of assets. Now let us discuss about our liabilities. So generally we are writing assets and liabilities. In the liabilities side we are writing capital. But capital is not simply as a capital. In the capital there are two types of capital. Ownership capital and debit capital. These are the two types. As an accountant student, you have to know how many types of capitals are there. So how many types of capitals are there? two types. What are they? Ownership capital and debit capital. So ownership capital. Ownership capital means the capital given by the owner. That means just a capital. To start a company, the owner has to keep some amount for the company. That is called the capital, ownership capital. But debit capital means reserves. We all know about the reserves, reserve funds. So that is called debit capitals. In some situations, in the illustration, they will give both and P&L account. The two capitals and P&L account. In some situations, reserves and P&L account. These are called as retained earnings. What it is called? Retained earnings. What is the meaning of retained earnings? It is a profit and it is used for the purpose of the company. The amount, the profit is used for the company purpose. It is called as retained earnings. And also long-term liabilities, more than 1 year, is called as long-term liabilities. And loans from the banks is a liability. Debentures issued, it is also a liability. And long-term loans from the financial institutions, not only from the banks, financial institutions also, it is also a liability. And also current liability. Current liability means in that current assets we have 9 types, and the current liabilities means bills payable, bank overdraft, creditors, outstanding expenses, income in advance. So these are the elements will be written in the liabilities. This is a brief discussion about the balance sheet according to the assets and liabilities. I hope you all like this video. I hope you all understand about the liabilities and assets. Thank you for watching my videos. Keep watching my channel. I will take a very interesting element in our next class. Don't forget to subscribe, like and share my videos. Thank you. Thank you for watching.